Here to discuss is Joan Solotar, Blackstone's Global Head of Private Wealth Solutions. Joan, it's good to see you. Thanks for coming back in to see us.
Thanks for having me.
Now, here in Yahoo Finance, we talk about public markets all the time, but private markets are huge, and increasingly, individuals have more ways to invest in the private markets, which is where you guys come in.
Yes.
So what kind of flows, what kind of demand are you seeing, and from whom right now?
It's a great question. It's really everywhere in the world that I travel. Advisors are looking to put more private investments in client portfolios. And just this year alone, first half of this year, we raised as much in the open-end private funds as we did all of last year. So definitely seeing demand on the rise.
What do you think is driving that?
I think it's a combination of what private markets offer. And you mentioned it's the biggest part of the investing pool. So if you think about, 90% of scaled companies, 90% of commercial real estate actually resides in the public market, in the private markets rather. And so if you're only investing in that 10%, you're really missing just a world of opportunity, number one. But what do private investments provide? Depending on the asset class, could be enhanced yield, higher return, coupled with lower volatility. And I think most importantly, they're important diversifiers with a stock and bond portfolio.
And you guys have been pretty aggressive this year. I know early on you said inflation's going to moderate. I don't mean you specifically, but as a firm,
yes.
Inflation's going to moderate, rates are going to start to come down. We want to put money to work.
Correct.
And as a result, you all have been investing in real estate, you've been investing in private equity. What is sort of the big bet now going forward?
So I'd say we are very sector focused. So you mentioned real estate, and it's so interesting because we had in the real estate markets 2 years of pretty negative performance out there. And in January, we indicated we saw a flattening in most sectors, the sectors that we're interested in, and that's proven to be true. And when you think about interest rates coming down and trends improving, it's created an environment that's much more animated. So even when we're selling properties, whether it's rental housing or logistics, we're actually seeing 3 times the number of bidders than we were a year ago. So we like sectors, for example, in real estate that center on where you have greater demand than supply, not surprisingly. So areas like logistics, where you have companies such as Walmart saying we're going to deliver in a 2-hour window, so they need to be close. We like rental housing, where this year you've seen some supply come on because of a lag from COVID. But when you look at housing starts, they're at the same level that they were 10 years ago, but we have twice as many people living in the country, right? So huge shortage there. And also student housing, very similar dynamics. And of course, data centers.
I was going to say, you saved the biggest for last.
I know, of course.
I mean, that has been a huge bet on the part of Blackstone. We talk about data centers a lot. We talk about NVIDIA a lot. We talk about the hyperscalers a lot. Do you expect to continue to see the kind of growth that we have been seeing?
Oh, yeah. This is so early. I was with Steve Schwarzman last week, and he said, think about when the light bulb was invented, and we couldn't imagine what was going to happen with electricity. And that's how I think you have to think about AI. So the hyperscalers are investing an awful lot of capital. I think it's something like $1 trillion. So the demand for scale data centers with connectivity to energy and with the proper equipment, it's just enormous. And you need billions of dollars to build these things. There's just not enough capital and not enough, today, connectivity to energy. So investing in data centers, investing in energy, all the picks and shovels around that, not just in the US. I mean, we just actually announced that we're going to be buying a company that's Asia-based, also data centers. It's the biggest investment in data centers in the world, and not just for us, just ever. So I think this is not dissimilar to how we thought about e-commerce more than 10 years ago. This is a very long-term trend, secular trend with a lot of tailwinds.
And just quickly, you and I have talked a little bit about public market valuations versus private market valuations, because there have been some questions, perhaps less so in real estate, but definitely in private equity, for example, in venture. There was just a story that crossed about OpenAI raising another huge amount of money. What do you make of those valuations, and what is the risk of overpaying for things in the private market?
Yeah, I think it's a fair question, and what we know and what we're more familiar with are public markets, right? And they move. And on your show, you were talking about it just earlier. We started down on the day and we ended up on the day. But in the private market universe, and we're the biggest investors in real estate, we have the biggest and broadest private equity platform, so we're seeing a lot. You really get to assess what true values are, what you think you can do to those assets to make them better and create value. So it's not just the price that you're paying. But they're de facto going to be more stable because they're not subject to the daily whims of the market, number one. And they will trade at a net asset value, if you will, rather than extreme premiums or below that, of course, discounts in any one day. So I do use real estate as the great example because it brings it home for people. The building across the street, it's just not moving in value by 10 or 20% in a day, but you can see individual stocks moving by that. So it doesn't often reflect what's actually happening on the ground.
Makes sense. Joan, thanks for coming in. It's great to see you.
Thank you.
Appreciate it.